Thank you, Stephen, for joining us today at NWR to provide an update on Hexagon. Stephen Hall is CEO and project leader of ASX-listed Hexagon Energy Materials, ticker HXG. He's over 30 years' experience in the energy sector, including his time as VP Strategy, Power and New Markets at Woodside Energy. Hexagon may be a new opportunity for some investors, but Stephen and his high-caliber team have been focused on rapidly moving forward their project here in WA to export low emissions ammonia to Asia. And they are at a point now to more broadly share their excellent progress with the market. Thank you, Stephen, for joining us.
Thank you, Aidan. I'm going to talk today about the part Hexagon intends to play in the energy transition and the opportunity that provides for investors. Just before we get started, this is our standard disclaimer. I won't go through it now, but I'd suggest you read it at a time that's convenient for you. Hexagon is an ASX-listed project developer with a proponent of a low-cost, low-emissions ammonia export project, which we call WAH2. The project has the potential to generate very significant cash flow over an extended period. We're targeting a very large, low-emissions ammonia market, primarily in North Asia, with Japan and South Korea leading the way. We've secured a site for our project, completed a PFS or preliminary feasibility study, and on the basis of the positive results of that, we're now in pre-feed and looking to enter feed Q2 2024. We're maturing a series of commercial agreements with potential partners that offer revaluation points between now and feed entry. And our target for FID or final investment decision is 2025. To talk a little bit about the market opportunity, fundamentally, it's using low emissions ammonia as a substitute for coal in thermal power generation. The reason people want to do this is all about reducing emissions. In contrast to coal, ammonia contains no carbon, so when it's burnt, there's no CO2 produced. There's huge market potential for low emissions ammonia, and as I mentioned, this is being driven by North Asia and Japan and South Korea in particular leading the way. Australia is seen as a key supplier for this market because we can offer competitive costs and supply from a secure location. We've also demonstrated our credentials over the last few decades in the way that we've built the LNG industry and the connections with those target markets. Thanks to the decisions that we've made, Hexagon is the best placed project in Australia to supply these markets, and I'm going to talk a little bit more about why we believe that's the case in the coming slides. And as we move through project delivery, we pass a series of milestones which are likely revaluation events for Hexagon. Let's look at Japan as an example of the market we're targeting. Currently, Japan generates about a third of its electricity from coal, and the country has made some very significant emission reduction targets. The uncomfortable truth is that something has to change if Japan is going to meet these targets. And a big part of that plan to change is co-firing ammonia with coal for power generation. And so initially, the target would be 20% ammonia, 80% coal. And over the coming 10 or 15 years, the percentage of ammonia would increase from 20 up to 100%. The impact that would have on emissions is shown in the blue bars in the chart on the right. And it's the scale of the co-firing required and the very clear and unequivocal support from the Japanese government that's really driving this huge market growth. And to put some numbers on it, the market's essentially zero now, but it's expected to reach 20 million tons per annum. And this is Japan only I'm talking about, by 2035. And the value of that would be of the order of $10 billion US a year. To successfully access the market, there are three key hurdles that a supplier has to jump across. And we've designed our plant and our project in a way that we meet these. So firstly, the product has to be demonstrably low emissions. That's defined in terms of tons per CO2 equivalent per ton of hydrogen equivalent. Now, whilst there's a headline threshold, it's clear that suppliers with lower emissions intensity will be preferred and prioritized. Hexagon's project has an emissions intensity based on our PFS of about a quarter of that threshold. So we're very well placed in terms of low emissions. And in fact, we have a suite of improvement opportunities identified where we're looking to reduce our emissions intensity further. Secondly, we have to be cost competitive. And in the Japanese context, that means a cost of $500 to $600 US a ton for clean ammonia delivered in Japan. Hexagon's base case cost of supply is around $550 US a ton, and we're targeting 500 or less based on our opportunities that we've already identified and are pursuing at the moment. And thirdly, the supply has to be secure from an established and stable trading partner. Australia is well positioned here. We're an established energy partner for Japan. We currently supply more than a third of their energy, and there's been a history, a decades-long history of collaboration to establish and sustain stable LNG supply for Japan over the last 30 or 40 years. Let's focus now on the actual project. The schematic here represents what we're doing. So the primary, on the left-hand side, the primary feedstock is natural gas plus some water. That's what comes into our production facility. And what comes out is ammonia, or NH3. That is transported via ship to our target markets overseas. In the process of turning natural gas into ammonia, carbon dioxide is produced. Because of the way that we've designed the plant, we can easily capture that CO2, which we transport to a sequestration site where it is permanently stored underground. To draw your attention to a couple of the numbers on the chart, bottom left, 25 years. So it's a design life of 25 years for the project. Hence my comment about long-term stable cash flows earlier. In terms of size, we're looking at 600,000 tons a year for phase one, or 0.6 of a million tons. The significance of that number is that it's large enough for us to capture material economies of scale, which keeps our costs down, but it's also a size that's readily accommodated in the market. You'll recall that the market size was 20 million tons. And then finally, in the top left, we're targeting being online well before 2030. That cements our position as an early mover and the advantages that come with that. It's also significant in that we're part of the solution. There are a lot of customer commitments to reduce their emissions by 2030, and by being on stream ahead of that, we increase our attractiveness as a supplier. The rationale that underpins this project and why it looks like it does is summarized on this slide. And to pick out a couple of points in the top left, we're using proven technology to generate hydrogen and ammonia. And we're doing this because the technology is already available, it's competitive, and it means that we avoid a lot of the risks associated with new technology. We're capturing the CO2 that we produce, and we will be storing it in depleted gas reservoirs. And in doing so, we ensure that we have a low emissions product that exceeds the standards required. We're going to export our project through an existing port, the Port of Dampier, which has existing bulk liquids handling. It has the capacity to take our project and already handles ammonia exports. And finally, we're looking to share infrastructure where we can with other industrial projects so that we can reduce our costs further. To talk a little bit about the importance of the project site, when we did our screening work, it became very clear to us that critical conditions of success were access to gas and proximity to CCS, port and infrastructure facilities. And it's on the basis of that that we selected Maitland as our preferred site, and we were delighted to be awarded that site by the West Australian government earlier this year. The purple polygon on the map is the Maitland SIA, and the black dot is Hexagon's site. You can see that there's a dotted line that runs immediately next to our site. That is the Dampier to Bunbury natural gas pipeline. So we're as close as we could possibly be to our source of gas. Equally significantly, that pipeline runs in an existing infrastructure corridor, and that corridor provides us with access to Dampier Port in the northeast and to each of our CCS options. Furthermore, the award of land in Maitland to other proponents means that there are opportunities to share our infrastructure needs with others and therefore reduce our costs. At first glance, the hydrogen sector in Australia might seem quite crowded, and in fact, there's over 140 hydrogen-related projects have been announced in Australia. However, only 30 of these are targeting low emissions ammonia as we are. And in fact, the majority of these ammonia projects are electrolysis-based, which have cost and schedule challenges relative to our project. In fact, there's only 5 projects that are based on gas reforming with carbon capture and storage. And within those 5, our WAH2 project is unique. We're the only one with access to an existing deep water port and multiple mature CCS options nearby. And it's that unique position that enables us to be an early mover and secures competitive advantages that are related to the technology choices we've made and the site that we've secured. Let's talk now about project delivery. Firstly, we're not planning to do this alone. We're working with a range of partners, each of them established operators in their own right. And that's shown in the picture on the right. So we're working with a selected engineer and technology provider on the ammonia plant, with natural gas suppliers around gas feedstock, around electricity and water providers, the proponents of CO2 sequestration projects, and of course, offtake partners as well. And it's working with others in this way that we believe offers the fastest, lowest cost and risk pathway to production. Secondly, we're building the right team. We have an experienced board with a diverse background in energy, finance, and project development. I'm leading the WAH2 team, and I'm supported by Reinhard, Neil, and Liz. And you can see from the details on the screen that it's a highly experienced team. We've got proven skills in project development, commercial negotiation and structuring, business development, and regulatory approvals. We've got a deep understanding of the energy value chain, of doing business in Asia, and the risks and opportunities associated with the energy transition. And finally, we've got strong relationships across Asia and also in Australia. On the right-hand side, our key technical partners are Petrofac, a world-leading engineer who we've selected to work with us on this project, and Topso, again, a world-leading provider of technology that will be providing the technology for our plant. And thirdly, we're taking a staged approach to project delivery that includes bringing in partners to leverage Hexagon's skills and capital. So on the left-hand side, we're currently in pre-feed, and we're looking to complete this by middle of next year. We'll be self-funding this, and as we move towards feed, we're looking to farm down Hexagon's equity and remain with between 25 and 35% equity in the project. Feed, we're looking to complete by the middle of 2025. The cost is expected to be up to $15 million. Our share of that funding will be between 3 and 5 million, depending on the variables I mentioned earlier. And again, we'll be looking to self-fund our share. In terms of project delivery, we're looking at target completion in 2028, total expenditure of 1.6 billion. We expect to fund our share approximately 60-40 debt to equity, which means that we're looking at equity of between 160 and 230 million for Hexagon. And finally, we'll be looking at the investment in phase 2 of the project once we have phase 1 up and running, with the significant cash flows that come with it. So we've made a lot of progress over the last year. We've identified the opportunity, we've secured our position as an early mover. We've completed our PFS with very encouraging results. We've identified our preferred site and we've secured it. And we've had significant and positive partner engagement. I haven't talked about that much today, but per the quarterly release, we are in confidential discussions with a variety of counterparties concerning gas supply, offtake, CCS, infrastructure access, and the like. And the common message from all of that, from all of those discussions, is clear support for our concept and our plan to deliver. And finally, we're working towards feed, and we're looking to enter feed in the middle of 2024. This is our project timeline, which shows what you can expect to see from us over the coming months. We're currently in pre-feed. In addition to the technical work that's going on, we're progressing those commercial discussions I mentioned. And the idea is to enter a series of MOUs and similar agreements, which we would mature into conditional agreements to support our entry into feed. These MOUs are significant because they're potential revaluation events for Hexagon. We believe that we offer a compelling proposition for investors. We're an early mover in a huge market. We're an advantage project that's made significant progress. We have multiple near-term catalysts for evaluation. We offer attractive returns, and these can be enhanced if we can access government subsidies and concessional funding, and the significant growth upside related to phase 2 of the project, but also value enhancement initiatives that we're pursuing on phase 1. Overall, Hexagon is an opportunity for pure play exposure to the energy transition, and specifically the importance of low emissions ammonia in that transition.
Thank you, Stephen. That was an excellent run through. Just perhaps a few questions from me on areas you touched on. Obviously, the people and project partners with the relevant experience are going to be crucial to you in delivering a project of this world-class scale. How have you approached that to date and gone about building that team and network of appropriate partners?
Thanks for the question. Fundamentally, we've been targeting experienced individuals, people that have done this sort of thing before, And that's because they can typically find multiple solutions to the challenges we face. They have the confidence to be pragmatic, and they can back their judgment. And of course, they have to believe in the cause. They have to believe in the importance of the energy transition and want to be part of the solution. And finally, we're looking for people that have outstanding relationships and networks that we can use as we pull the different strands of this project together. Maybe to talk a little bit about the individuals. Reinhard led Woodside's commercial function. He's also led Woodside's marketing, trading, shipping function. He's extremely strong commercially, very deep experience of new market and business development. He's led the negotiation of LNG and gas contracts to support a series of major projects. Woodside's Pluto project would be one example. Neil's got significant experience with Chevron, particularly strong skills in market development. He led the marketing for Gorgon and Wheatstone projects. Now, each of those projects had significant hurdles to overcome, and he was instrumental in doing that and establishing the project in the market. Reinhard and Neil each have strong relationships across Asia, and they're very much complementary to each other. Liz is an engineer by background, specializing in safety and risk management. For the last 10 to 15 years, she's focused on delivering regulatory approvals in the Australian energy sector. She's worked for companies like Santos, Woodside, Beach Energy. She's got a deep understanding of the Australian regulatory framework, and she's got really strong relationships with the regulators, with government departments, and with various service providers in the sector.
Thank you, Stephen. Great run through, great team that you're putting together there. In terms of, obviously, you've achieved a lot in quite a short period of time. For investors now, perhaps taking a look at the company for the first time, or for existing shareholders excited by the opportunity, what's the key milestones that you now expect in the coming sort of 6-12 month period that could really sort of put you on the radar and re-rate the stock?
The big milestone is feed entry, which we're targeting for mid-24. But there are a series of subsidiary milestones on the way there as we seek to formalize the commercial discussions that we're having in a variety of agreements. Those are significant because they confirm the interests of other parties in our project, and they reduce the level of uncertainty that we have as we move forward towards feed. And of course, both of those things are important. Those MOUs and feed entry itself, we see as significant revaluation opportunities for the company.
Thank you again, Stephen. Perhaps just to wrap up, I always like to ask at the end, just to sum up in your words, the opportunity for investors in Hexagon.
I mean, firstly, I think there's a short-term opportunity, which is basically invest now before the upcoming revaluation points. In the longer term, the opportunity is one of pure play exposure to the energy transition, and specifically the important role that low emissions ammonia is going to play in that.
Thank you, Stephen, for your time this morning. Great run through. Obviously, you've achieved, as I mentioned, a hell of a lot in a short space of time. And here at NWR, we look forward to getting further updates from you in the future as you hit all those milestones in 24 and 25. So thank you again. Look forward to hearing from you in the future.
Thanks, Aidan.